Hey everybody, and welcome back to another video. This is how to invest, and this one is 15 different stocks that fell over 5% today. We had a rough day in the market here. There was blood in the streets. Pretty bad if you were a stockholder today, but if you're looking to buy, great news. Or if you're a Playboy stock, we'll look here. What's going on with them? Whoa! 20% again. All right. But if we look at the overall markets, their S&P is down just about, almost even, it's only 0.2. So the Dow is down 0.16%, NASDAQ down 0.36, and the Russell is down almost 0.5. Let's see the Russell. And this is usually the best indicator of some of the stocks that I would be investing in, not for everyone, but typically I invest in smaller market caps compared to the rest of the broader market, especially towards the FANGs. But yeah, it looks at one point it was down over 0.5%, closer to a full percent in the Russell 2000. And that certainly is going to cause some bleeding in some of the more retail-driven trades and stocks. So let's get right into it. First stock that's down today, Quantumscape. I've done a couple videos on this one. You guys should be familiar if you've been watching my videos. This one's down almost 9% at 8.5%. $41, getting a very attractive under that $40 range or under 15 billion. And if this continues to fall, I'll be loading the boat up and pulling the trigger with the wheelbarrow. I've done a couple videos on this, so if you're interested in Quantumscape and if you want to do more research, do some look at those videos and certainly put in some more research and development on your own to see if it's a good buy or not. But let's get into the second one, because I do not want to beat around a dead horse. Next one we've covered on the channel, I think once before. It was on, I think almost a week ago, on I think it was 10 stocks that dropped over 5%. Not many people viewed that. There were some really good opportunities in those stocks that fell. Anytime there's a red day in the market, you definitely want to take advantage of it and really kind of give your opinion on if you think that the fall was reasonable for the stock that you're questioning. And if it wasn't, then for all means, buy it. So Plug Power. This one has been falling due to, let's see here, look at the news. There was, I think it was, they had some sort of audit or they had to redo their financials. Their financial statements were wrong, and some people may have thought this was fraud to mislead shareholders. I'm not seeing much about it here. I did see an article on, I think it was Webull, saying from, I think it was Morgan Stanley, saying that it is currently at equal weight. That this just meaning that it's at a pretty fair value for where the company is at this stage in time. Underweight would be where you would need to buy more for it to reach a fair value, saying that it's undervalued, and of course overweight being that it was too richly valued. Just kind of some weird technical jargon that they like to use for some reason. I don't know why they just say undervalued like normal people. But we can see here it's reaching a $17 billion market cap. If you wanted to do some more research into how much they're making currently and if they're worth that much as a company, by all means, go ahead and look into Plug Power. The next one is GameStop, not MemeStop. It has fallen over 10% today. This on the news that they are looking for a new CEO, which I generally think is quite good news considering that they're kind of a dinosaur company. And I think they really need a new leader to push them to this new unfound territory that they're trying to go to. Of course, they have Ryan Cohen, the head of the board members, who is leading this search. He's looking for someone forward-minded in the e-commerce space, which they are looking to pursue. This stock market capitalization has fallen under 10 billion, which is actually pretty attractive if you're looking at this from a long-term perspective and believe that their plan to flip the whole business model, really. If you're bullish on it, then I think this could be a good investment to look more into. Some of the other news in this, They just had an offering that was a little overdue, in my opinion. I think that was around 140, 150. The stock offering was. So they're raising capital. I think they raised $300 million, which they even honestly could have raised $1 billion or a couple billion for how much the stock increased and how fast it did go. And they might have needed that much to really propel them into the next stage of their growth. But as you can see here, they're just saying that it fell because they're in the search of a new CEO, and that's about it. So if you want to look more into GameStop, by all means. The next stock up here is one that not many people talk about, Kahoot, ticker symbol KHOTF. So if you have ever been in the United States public school system, or I'm not sure private schools use this, or abroad, it is a online quiz software. So you get to put in basic questions, some more basic formatted questions. It's not too complex, and there's not too many nuances that you can create for the type of question, but it is multiple choice, and you get the whole class involved. They get in on their computer or their laptops, and they're able to contribute by answering the question that pops up on either a big whiteboard or just on their phone. So the market capitalization is $4.2 billion, and it has moved down almost 9% today. If you're looking at this from a TAM perspective, I think this is a great value here, just at the total addressable market, considering that basically every single school in America, if not the world, could use this in some instance, or has used this, or will use this. One thing about this stock, it is not publicly traded. It is an OTC, so you will need an OTC brokerage. So if you're looking to buy that, keep that in mind. You will not be able to purchase this on Robinhood or Webull. So with that, let's get into the next one. We have ticker symbol SPCE, Virgin Galactic Holdings. This was previously a Chamath. I can't really pronounce his last name off the top of my head. I don't really remember it. Sorry. No disrespect to him. Great investor. But I think he did dump his stake in this because he was holding some sort of margin calls or needed to free up some capital. So I don't think he's any longer involved in this. But they are a retail space exploration kind of company. They will take you up in these customized planes that take you just outside the atmosphere or just under the atmosphere, I'm not quite sure. And they drop you down quite rapidly, and you get to experience zero gravity without leaving the Earth. And these are going to be very, very expensive flights and events. So these are targeting kind of a very wealthy class, and the market capitalization is $6.3 billion. If we look at the 1-year chart, it is very prone to run-ups and swift moves downward. Let's get the max. You can see here it moved from 7 all the way up to, I think it moved up to 37. I think this is just the intraday high. I remember following this early last year. And it was just one of those stories where you're like, oh my gosh, this is, like, is it ever going to stop? And of course it did. Like all things, what goes up must fall down with no support. And it crashed all the way down to around $14. So it went from 37 to 14, which is over 50%. And since then, a little bit more stable, went up to 22, and then really shot up at the beginning of the year. I think that was more due to stimulus talks and people get just kind of hype and speculation in the market, and has since cooled off, and has been on a downward move since in the past 5 days, 1 month. Yeah, the 1 month chart is still red. So if you're looking to do more research into this, by all means, definitely do some more. Ticker symbol SPCE. The next one, another meme stock up here. We got AMC. This one is down. I didn't really see too much news on this one. I tried to check Webull, just kind of general news outlets, but it's moving 8.5%. That is a pretty substantial move for no news. I think this could be backed off of the fact that people are just starting to realize that based off their revenue and their earnings report from the quarter, that people really aren't going to the movies as of yet, and this is still more of a reopening play and will be kind of a slow and drawn out process. I think movies will be one of the last things that most people will readapt to, just considering the fact that if you're in a movie theater, you're going to want to eat. You're not going to want to have to wear a mask and then take it off, put it on, have gross hands, wash your hands in the middle. It's just a big process, I think, for a lot of people, and just something that most people would rather avoid and have come to enjoy more and more, staying in and watching a movie from the comfort of their home, especially the fact that they most movies and TV shows and anything that you would want to see in a theater is a direct release now, so that it's not really a requirement to see like it used to be. So if you're looking into AMC, I would definitely do some more research. Let's get into the next one. The next one is FUBO TV. This is a older stock we can see if we look at the 5-year chart or the max. Oh, never mind. I guess I was looking at a different one. But this is a streaming service. They run a lot of sports television, especially soccer. That is what I know them from. They stream a lot of different leagues and have quite a wide variety. And they dropped almost 8.5% today too, and just under $3 billion market cap. Just for streaming services, that is a pretty small number because they usually trade at quite a high multiple, and streaming services have a really high margin in general, meaning that they don't need, or they just make a lot of money on their customers. They make over a 50% margin easily, just because there is not much labor cost that goes into it. It is mostly obtaining the rights to shows or services such as sports, and then playing them. So it's really just a capital allocation issue, needing money to obtain these rights. They also are a little bit into gambling, which is a growing field. So if you're more interested in this or the gaming industry, by all means check into FUBO. Another one in the gaming industry is DraftKings. So this company is huge from a market capitalization compared to other gamblings, because they are nationwide and they have quite a user-friendly mobile app. Their market capitalization is $23 billion, and they dropped almost 7% today. The news, if we look here, I think this is another one I couldn't find too much to go off of on why it had such a substantial drop. I think that people are starting to realize that it is a quite diluted market. There are a lot of people trying to get into gambling, knowing that this will be a very, very lucrative field in the future, just based off the fact of geography and most states still being legal to gamble. And as more states legalize it, the obviously numbers will increase. It's a pretty simple call that a lot of people are basing it off of. And I think people are starting to flock towards the smaller market capitalization plays to earn greater returns in the short term. But I think if you're looking at a long-term play on gaming that is nationwide in the United States, I think DraftKings is your bet. If not, if you want to look at Penn National is another one, but that one did not fall 5% today. So if we go to the next one, this ticker symbol LAZR. This is Luminar Technologies. This makes LiDAR, which is sensoring for EVs and other technologies that need sensors. Market capitalization is $6.6 billion, and it had a 5.5% drop today. I couldn't find any news for this either. I'm not too well versed on this stock. I haven't done really any research, but I've seen a couple other famous YouTubers cover this, and I just wanted to put it out there to you guys to see if you guys know anything or if you're interested. So definitely do some more research on it. If you do know anything about it, let me know down in the comments, and I will definitely check it out. So the next one is Freddie Mac. This one used to be a huge company, is what I was thinking. Ooh. We'll go back, look at the max chart, and oh my, back in the days before the Great Recession, they were a very, very big loan offering company and financing. Since then, you can see that they dropped quite substantially, and we're at a quarter per share, so almost literally a penny stock. If we look here today, it is $2.17, and it fell over 6%. They are not nearly as big right now because there's a lot more regulations in the housing market and just financing and loaning market. They're not able to take these junk loans and try to make money off of it and profit it by grouping them together, saying, oh, well, a bunch of these junky ones are together, and they can't fail. If you watch The Big Short, it is a pretty good, accurate representation of what happened in the housing and financial recession of 2008, 2007, 2009. But if you want to look more into this, they have kind of been really, really hurt by the low interest rate, especially currently. And kind of my view on why they're falling today is people are factoring that low interest rates are here to stay, even though they're even at zero in most cases now, or slightly above zero, maybe 1%, that they're going to stay below 3, below 5% for quite a while, and that it is not changing anytime soon. So we go to the next stock. This one has been in the news a lot recently. So there was a big scandal, nothing to do with the company, but a family fund, which is similar to a trust fund, or not a trust, a hedge fund, but is only money that is within a family, so cousins or direct family can contribute, and they were running this fund, and they had massive, massive leverage risks, so they went to a bunch of almost every top bank on Wall Street, and they asked for leverage to buy mostly Discovery and Viacom CBS stock. Discovery has since had quite a substantial bounce back since this happened. It was called Archegos Financial, and they leveraged their money to keep buying more and more stake into Viacom and CBS, leveraging to up to, I think it was up to 15% in both companies, for a pretty average size family fund. I think they were around maybe $1 billion or $2 billion, and they leveraged up to over $10-15 billion, creating almost a 30% stake total in the two companies. And because of this, it caused all of the banks to close out their positions because they did not disclose that they were holding positions in different banks. They were just going in and saying, oh, hey, could I leverage more money, without telling them that, oh, yeah, I'm also leveraged up to 1,000% at another bank, saying, oh, most people would want to know if you're highly leveraged at one different bank, let alone 5. And I think they were up to 10. And Goldman Sachs was the first bank to notice this, and they closed out their position somewhere around the top. So they actually profited quite a bit from this, but every bank after that, you can see, has probably been hurt after buying in, and then the quite substantial decline. But since then, the family fund has had to liquidate over $10 billion, selling out of their assets, and most of them being at a loss, I would assume. And this has nothing to do with the company. Viacom's still doing pretty well. The Paramount Plus is a big hit. Unlike a lot of people would have thought, a lot of people's theses were that there's already too many streaming services. Who's going to need another one? But I think that the Nick and I think Nickelodeon and a couple other ones, especially for kids, and if your kids are in on it, you're going to have to watch it, and you're going to find stuff on it that you're going to enjoy too. I think could be a very, very big positive for them in the future. So if you want to do more research into the company itself and not so much the controversy like I get into, definitely check out Viacom C. There's 2 Viacoms, so just to be specific, VIAC ticker symbol. Next one up here is Carnival Cruise Line. This one fell 5.29% today. This one was, again, I didn't see too much news, but I think a bunch of them were down today. Not quite as much as Carnival because their balance sheet isn't quite as strong as the rest of them, but they have more potential upside if we do see a swift economic recovery and we do see the ability for these ships to set sail soon. That this stock fell because they're not allowed to sail. I know that Norwegian Cruise Line was on Mad Money last week on CNBC, and they talked with Jim Cramer, talking that he's done everything, talking to the CDC, just trying to allow them for their ships to get out of the port. They just need some revenue. That they have not had any luck trying to negotiate or plead with them. The one offer was to vaccinate every single worker, every single customer, which is people going on the cruise, and to only operate at 60% capacity. And the CDC still refused to accept this. So really, they're just kind of saying that they don't think cruising right now is a good idea, or that they even wanted to allow it. So until further notice from the CDC allowing the ships to set sail with some restraints, these stocks are burning money, quite literally. They are not making money anywhere without their cruises. Maybe some on investments, but they are just taking out more and more debt, which is becoming more and more expensive by the day as interest rates rise, yet slowly. So if you want to look more into a cruise stock, Carnival Cruise Line fell over 5% today, ticker symbol CCL. Next one is a 3D printing stock, Nano Dimensions, NNDM. They do more specialty printing, more kind of individualized parts, and not something that's easily replicated. The market capitalization is 1.8 billion, and it fell today. I do not see any news articles, so sometimes that it could be a red flag that it is falling over 6% on no news. But if you believe in the company and you believe in it over the long term, that could be a great buying opportunity. One thing I wanted to look at here, I've heard that there is quite a high short interest into this stock. Kind of. I was reading the Webull comment section saying, I think that people were saying as much as 20 to 30% shares short, and Yahoo's only saying 5%, which is fairly high, but not too high. I guess people shorting have a general fear just from GameStop short term, because people in GameStop got burnt extremely bad, but 5%'s I guess decently high for the market currently. We don't see too many shorts out there because I believe most people are stating that the market should go higher as 2020 advances, or 2021 advances, sorry, and that we see these earnings reports smash expectations and from year-over-year comparisons. But if you want to look more into Nano Dimensions and a 3D printing stock that is great for the future and for future growth, check it out. Next stock up here is one in the cannabis field, and we have talked about it as a comparison from some of the ones that I've talked about in the past, but this one is Tilray. This is based out of Canada, ticker symbol TLRY. Market capitalization just fell under $3 billion. So I think I was talking about it in about the 3.5 billion range when I compared it to, I think it was Harvest in that video, maybe the first one I made. But it fell 13% today. Now, this is off of news with they are coming to a merger, and I think the merger is with Afria, if I'm pronouncing it correctly. And people are a little scared at the earnings report that Afria just dropped because they missed analyst expectations by quite a bit. So that means that people are afraid to buy Tilray and are in fact selling it because they think now that the earnings report came out that Afria is not a good company and they think it was a bad buy, which I'm not going to state my opinion. I don't really follow these two companies very much. I think that Canadian cannabis companies get overhyped a little bit just because of their ability an ease to buy on the market because people on Robinhood and Webull are able to buy these stocks, and some of the ones that are based in America that are OTC stocks don't really get as much hype, where I think they should, because they will be much more valuable and lucrative businesses in the future once it is federally legal. But if you want to look more into this Tilray company, by all means, and let me know in the comments section if you are bullish on it and if I'm missing something. But if not, let's get into the last one. This one is quite the doozy. I am by no means recommending to buy this. This is just for entertainment and research purposes, but EHang Holdings, this is a Chinese company, and they are a drone delivery service. They make similar to ACIC company, which is a SPAC that has gone public recently, that is merging with Archer, but they are trying to make drone deliveries that Amazon has been searching for quite a while. This is a bit ahead of ACIC, which is an American-based company, but this based in China, and I think they are already starting to deliver packages. But this company has come under fire in the past couple months for allegations of fraud and misleading the shareholders, and it has dropped quite substantially from $125 all the way down to under $30 now. So this is looking pretty bad if you wanted to look more into this and read if the investor fraud relations and kind of the shareholder complaints are valid. By all means, I would take a much further look into this before even thinking about buying this. Even Yahoo Finance right now still says it's overvalued after falling over $100 basically. So this one I would try and do the most research on. But thank you all for watching. If you made it this far, check out my Robinhood and Webull links in the description if you don't have an account open with them. And thank you very much for watching. Subscribe, like, and I will see you guys on the next video.